there's a clear bias in the market first. Okay. So if there is a clear bias, then I already know which direction I'm most likely to get opportunities. Early in the session, when the market started to push more positive, I specifically said that we'll probably get, it looks like we'll get more opportunities in the positive direction. That's not something that I can know for sure. I'm just judging it by what's happening at the time. Does it look like the market wants to go up or down? If it looks like it wants to go up, then that's the direction I'm expecting more opportunities to show up, because the only way the market can go up is if most of the stocks in the market are going up. It doesn't go up unless most of the stocks in it are going up, since the market is a composite of individual stocks where their total value is being presented as a single number. So therefore, the single number moving up means that most stocks are moving up. If it's moving down, then most stocks are moving down. So if I already know there's a bias in one direction and I see a number of stocks that are following along with the general pattern, then that presents a stronger opportunity for me than if I were to see the opposite, where if a stock's going up and the rest of the market's going down, it doesn't mean that you can't trade it, but it does mean that it has less marking in its favor. If the tide's going one way and the stock's going the other, that's fine. I don't have a problem with that. In fact, I like to look for stocks that can do that. But I also realize that those stocks often can run into a problem. If the market keeps going in the other direction, they eventually will usually start to lose their momentum. So in short, it's easier for a bullish stock to stay bullish in a bull market, and it's easier for a bearish stock to stay bearish in a bear market. All right, Coinbase is getting close to T2, by the way. All right, so in short, looking at this picture, right, let's just get some idea of what we could do as far as looking for a trade opportunity at the time. And the first thing I have to mention is that if you keep adding more terms and more conditions to the reason why you're going to get into a trade, you're missing the point. You don't have any way of knowing what the outcome is going to be before you get in. Well, actually, before you get out is probably a more accurate way of saying it. So before you get out of the trade, you will not know whether or not it's going to win or lose. NVIDIA 483.63 is target number 2. It's getting closer and closer to that. Obviously, there's a pretty good trend across the board for the market, so a lot of stocks are going up. Roku, I'll put at the bottom since we've already hit that target. Okay, so if we are right, they're going to add that video to the welcome email now, and so just make sure they did that. All right. Anyway, the video I just posted. So if I'm looking at a stock and it's on a trend, what does a trend look like? It's when a stock persistently goes up or down. That's it. The only thing that defines a trend is if the stock persistently goes up or down. It is not what is does the moving average short term cross over to moving average long term. Doesn't matter. Doesn't change anything. That's not how you define a trend. All that can say is that the momentum has been going long enough where the moving averages cross over each other. It does not define the actual trend. The trend is what causes the moving averages to eventually cross over. The chart shows you whether or not you're trending up or down, which means that you don't need anything on the chart to know if you're trending up or down other than the chart. The chart says, I'm going up or I'm going down. That's it. So if I keep adding more, thinking more, trying to interpret more, if I'm trying to add other studies and things like that to quote unquote confirm the trend, it is a waste of time, because none of those things are going to tell you anything that you don't already know, that you can't already see. All of those studies are based upon what the bars are doing. The bars move, and then the study calculates what happened already. So you have zero reason to just keep adding stuff to it. Now, can some of them be useful? Sure. But only thing they can be useful for is to give you some idea of how to quantify what's happening. So if I want to quantify if the trend is moving very aggressively, very slowly, very awkwardly, okay, a study can help me with that. But it doesn't tell me anything more than that. So if I want to use the stuff on my screen, how do I use it? I use it to give me a sense for how fast or how slow something's moving. If it's moving very fast, it's going to be traveling outside of the channel. If it's moving very slow, it's going to be trading along the middle. If it's moving at a nice pace, it's going to be right at the edge. Thank you, William. Holy cow. What happened? If you're in Coinbase, stay in there. If you're already in it, stay in that one. That's going crazy. If you're in Coinbase, do not jump out right away. You're going to have to manage your stop losses carefully. It's moving so fast that you'll probably have to, if you have Bookmap, try to look at that. That should help you. But if you don't have Bookmap or you don't have any way to look at the order flow, you'll probably have to have your stop loss about $1 behind the market. And now that this next bar is already formed, I would say somewhere halfway between the low of that bar and the high of the previous one is probably where you want. Okay, like right there, you should be stopped out. Okay, but it might still go higher, but if you got stopped out, don't worry. There's nothing you can do about it. Okay, so you should be stopped out on that, but it may take a second move. It's moving so aggressively right now, Coinbase, that wow, that was. Anybody see what the news was? I don't see anything. Not yet, but there must have been something. Rivian's up a little bit. Rivian just hit T2. Sorry guys, I'm just looking at this. So right now you're kind of in no man's land for Coinbase. So if it starts to consolidate and move again, I don't have any projections of where it will go. I don't know what this news was that got it jumping like that. Did Mara move up? Yep. Okay, so this is a crypto, right? Yep, it's a crypto thing. So if anyone sees any crypto news that came up, let me know or let us know. Oh, nice. Nice. Okay. Thank you, Jorge. All right, so that may continue to move. So this is where you have a high risk situation where you can look at this, but I'll warn you that there's no way of knowing how far it will go. So if you're going to try to trade this at the extremes, you better be really good at managing your trades. If you're not, stay away from this because you will get destroyed. If you're really good at managing trades, you know it. You can document it in your risk to reward, that you usually get. If you're good at cutting your losses when it's not working out, if you can position size, then maybe you can do this. If you can't, do not step foot into that arena. You'll be like a little kid trying to fight Mike Tyson. You're not going to win. So if you don't know how to box, stay out of the ring. All right, that's your warning. All right, anyway, going back to what I was just saying. So if I'm looking at the chart, I have some technical studies on here that are there for only a couple of purposes. The main purpose is to help me quantify the degree to which something is happening. In other words, they're not telling me the market's going up. I can already see the market's going up. I can already use my eyes, which are much more sophisticated than the chart, to look at the chart and say, okay, does the price tend to go up or down from left to right? In other words, if I can't see that, no study in the world is going to help me. If I can't recognize that the market's going up, the studies will not help me. Because if I can't see that, I do not have what it takes to trade. I do not have the right mentality. So there you go. Sounds good, Lorna. Sounds good. But if I can recognize a basic pattern like this, then I'm good to go. And I know that everyone here can. I just think that a lot of times we look away from it and we try to look for other things to tell us something. So the first step is just to recognize the obvious. Is something obviously going up? Yes? Okay. If it's obviously going up, first it goes up here. So this is part one. We go from here to here. This establishes the fact that the stock looks like it's trying to go up. Then it pulls back. And then it does what? What does it do after it pulls back? That's the thing we're supposed to look for to tell us it's time to get in. What does it do? It went, pulls back, and then what? It resumes. It resumes. So, if you're not sure when to enter, if it doesn't look like the trend resumed, then don't enter. Uh, oh, you can't see it. That's weird. I'm recording it either way. Let me restart it. Sorry, guys. I guess the projector went out. I don't know. But I'm recording this, so you'll be able to see a replay anyway. Hold on for a second. What do you mean volume and price action? What does that mean, Robert? That's what I'm saying. You're overdoing it. You're really, really, really overdoing it. You're adding things that don't matter. What volume? What price action? The price action is the stock went up, came down, and starts to go back up. That's it. There is nothing more. And I literally mean there is nothing, as in no thing, as in nada. There is nothing more. Okay, the reason why people throw all this extra stuff at you is because it makes it less likely you'll ever get into a trade, which makes them seem more like they're actually doing what they're supposed to do. Forget all that stuff. The volume, it's Apple. How can Apple's volume not be good enough? Apple trades more shares than most stocks, so volume's not an issue. I don't need to see any dramatic change in volume to recognize the stock is going up. It's going up. That's it. So up, pullback, starts to go up. Now you got your entry signal. You either take it or you don't. No, well, let me double check my RSI. Forget the RSI. Let me look at my, forget the MACD. Well, did the moving averages? Forget the moving averages. Does the freaking thing go up? Yes or no? That's it. The reason why a lot of you are struggling is because you literally think so far into this. You're trying to think that there's more to it. It can't be just that. Yes, it's just that because everything else just tells you the same thing. If I write the same number two in different letter, a different handwriting, it's still the number two. Doesn't matter how many different ways I write it, it's still number two. So if a chart goes up, down, and starts to go back up, it's the same thing. As if I said, well, I'm waiting till the MACD goes up. I'm waiting for this, I'm waiting for that. It doesn't matter. Coinbase is still going up, Brian. As I said, unless you're exceptionally good at managing a trade, stay away from it. If you are good at managing your trades, maybe you can make some money off of that. Most of you probably can't handle that situation because you're going to stay in when you're losing or you're not going to do what you're supposed to do. So I'm not telling you this. I'm just saying you have to make the decision. It's a high risk situation. I don't know if it's going to keep going up. I have no idea where it's going to go. So either you stay away from it. If you trade it and you get hurt, it's on you. Got it? All right. Now, that being said, it starts to resume. Literally, all I do when I see this situation is I buy. I do not look for anything else. It resumed. I buy. If it doesn't work, I sell. If it does work, I stay with it. There's nothing that I'm going to ever see that's going to tell me this is going to keep going for sure. Not going to happen. There's nothing that's going to say I have an 80% chance of winning. Not going to happen. Best case scenario, I have somewhere between a 40 to 60%. That's all. I have a 40 to 60% chance that that's going to work. And I don't know if it's going to be the 40% or the 60% until afterwards. So the only question I have is, if this goes up, do I think there's enough room for it to go up to justify taking the risk of going from here to there? From here to there. Now, if you're having a hard time accepting the simplicity of this, that's fine, but you're in a challenge and you're not going to get anywhere without jumping in the water. You can't drown because there's no water in this case. All you can do is make a trade. Either it's going to work or it's not. Most of us are spending too much time philosophizing about trading and not actually doing any practice. You're not doing enough. So therefore you don't learn anything because you're constantly making this into some sort of mental exercise where I'm trying to figure out if there's some other possible way to make this work way better than it can. You can't. You have to keep doing it to get used to it. When you start trading and you start doing this stuff, then it will start connecting in your brain. If you don't do that, if you keep looking at the chart and waiting and waiting and waiting, and then finally you say, okay, that looks crystal clear, absolutely perfect, I'm going to do it now, most likely it's too late. You have to take the chance when it feels uncomfortable. If you take the chance only when everything feels very clear and confirmed and you have zero doubts at all, you can't have zero doubts. Every trade you do, you should be expecting the possibility of a loss. So if you feel absolutely confident that the trade's going to win, that's when you know you shouldn't get in. The moment you think it's a sure thing is exactly when it's not going to be, just as a fair warning. So every trade that you'll ever get into will not feel like it's perfect. It's not going to feel like everything is going to work out, but it will be clear, abundantly clear, if you look for the right setup, but it's never going to be perfect. It's never going to be everything is exactly what I want. It's going to be everything is as good as it's going to get. And either I take the chance or I don't. So I constantly get the question about the entry, and I keep saying the same stuff. For those of you who've been here longer than a month or two, have I ever given you anything other than this? Do I ever say anything different? Not at all. For those of you, well, I don't know how many of the funded traders are in here, but as long as you just listen to that advice and don't think that there's more to it than what I say, you'll be fine. If you keep trying to search for something more, that if I just keep asking this question, maybe he's going to give me that extra thing that he must know that he's not telling us. There's nothing more. That's it. So, pullback resumes. That's the only trigger you had. This one worked out very, very well. This would have been the same thing, except that happened right when the news was released. And as I said, you're not going to enter into a new trade when the news is released. So in this case, the only reason you can't do it is because it happened at a time when you're not supposed to enter a trade. It just so happened this one went the right way. Now over here, I still wouldn't do it because it's too soon after the news. So to me, any entries after this point don't make any sense. And now you can do it. Like in other words, if this starts, let's see where Apple is first before I say that. Apple, all right, Apple's pretty close to target number 2, 183.01. 183.01 is target number 2. Okay. So if 183.01 is target number 2, which it is for Apple, you have basically a short distance to go before you reach a point where you can't really say if it's going to go significantly beyond that. So this is a resumption right now, or at least it's looking like it's about to be. Still hasn't done it yet, so it's flattened out. And what you're looking for is for this to keep going up. So far it hasn't. It's just sticking around the middle. But if it starts to look more like this, where it went down and then clearly goes up, now you got your signal. Now whether or not it works, you don't know. All you can do is take a risk. So right now it's almost there. It's a little bit more. A little bit more. Still not there. Ideally, in this case, since the channel top is fairly close, it should be able to reach up to there. If the channel is really wide, you can't wait that long. You'll have to get in sooner. But in this case, channel is pretty narrow, so if it gets close to the top of there, doesn't have to go through it or anything like that. Just as long as it starts to get really close to there, you got a buy signal. And if you take that buy signal, only thing you're looking for is for it to go from wherever that is to 183.01. If it doesn't do that, you're stopping yourself out at roughly 182.24. Now, obviously, this cannot possibly work as well as the ones that came before it, because the ones that came before it had a lot more space to go. No, you don't have to wait for it to finish. Just wait till it starts to get close to the top of that. As long as it does that, then you're good. Now, if it works, great. If it doesn't, it doesn't. But this is the part that I know that a lot of us are struggling with. You're thinking about whether or not it's going to work. You don't know. All you know is that that's what it's supposed to look like, so that's where I'm supposed to take the chance. Now, me personally, there you go. That qualifies perfectly. So now you're good right now. Now, how do you do it? You take a small enough position where you're not risking too much. You're not risking the farm on this. You're just risking whatever is reasonable. So if you can't afford to lose more than 35 bucks, you do a quick calculation in your head of how far down from entry to exit would be a $35 loss. Once you know it, based on the number of shares. So once you know what that is, then you're good to go. So now, basically, if it drops below 182.24, you're out of the loss. You lose whatever the dollar amount you can afford to lose is. And you're making sure that your dollar amount you're losing is not more than what you make on average. However, if it does work out, okay, that's a stop out for sure. Just like that. Now, does it mean it won't go up later? Nope. But it means this time around it didn't work. That's it. So it worked here. It would have worked there if we had a chance. It didn't work there. That's all. So now you see when it doesn't work, and now you see where it did work. And there's no difference between this and this other than this one gives a lot more opportunity because it happened earlier. This one gives a lot less opportunity because it's happening later, and there's less room for it to go, but it still qualifies. Questions? All clear? Okay. Now, I wouldn't try to do reversals per se, but the main point here is all you're looking for is the same pattern. The more time that has elapsed since that trend started, the less time you got for it to continue. So therefore, your best practice is to take less risk the longer the market's been trending. When things happen early, you take your larger risk. When I say early, I don't mean like at the very start of the day. I mean after something is established, right? Right at the bell, you can't do that. But after it's established, you can go ahead and take a chance. But no matter what you do here, all you're going to have is probability. Either it's going to work or it's not. James, I honestly don't really subscribe to most of that sort of thinking. So if it works, great, but I've just never really seen consistent proof that it does. So that's why I don't do stuff like that. But nevertheless, if it works, if it can be documented, then no problem. Do it as much as it works. Okay, so that's all. All right, so I'll save this recording for you guys later, and we'll go from there for that.